Let us continue our dive into technical analysis. The purpose of this video is to give you a clear and deep understanding of how to recognize trends. First, let us find out what the trends are. A trend is a key element that helps you identify the most promising directions for your investments and trades. Recognizing trends means having a compass in the world of finance that will keep you from getting lost among the many opportunities and risks. You have probably heard the expression, follow the trend. Most newbies choose trend trading for good reason. Such an approach makes you trading more accurate, offers better reward to risk settings, and ultimately makes it much easier to follow a trend that already exists. In other words, it is a good idea to open an order in the direction of the main trend. We have already talked about candlesticks. If you missed this information, it is better to watch the previous video and then come back to this one. If you remember everything, then let us move on. Take a look at the spot of the US dollar index or any other chart. If you had to guess what trend prevails in the chart, what would you say? Is it an uptrend or a downtrend? Hopefully, your trading instincts will tell you that the trend is upward. This is right. Imagine you're walking up the stairs. Each step you take is like a new price that is higher than the previous one. Prices in the market also go up step by step. This is what we call an uptrend. It reflects people's willingness to pay more and more for a product or a stock, which means demand is increasing. If the market is moving upward, in which direction would you want to trade? Is it upward? You're likely to open buy orders amid the uptrend. How can you distinguish a trend? It's very easy. Look at the price chart. If you see that the price seems to be climbing, it's an uptrend. This is like a sign for traders. Go ahead. It's time to buy. Prices are likely to rise further. This type of trend is easy to recognize. However, what should a newbie do in the following situation? There is a high, a low, a new high, then a downward reversal, a slight rise, a collapse, and then finally, the price increases again and again. At this point, it becomes a little more difficult to identify trends. The thing is that is important for us not only to see that prices are climbing, but also to recognize when they may stop or decline. There are always movements in the market. Some of them are called momentum movements. It's a situation when an asset price jumps, breaking previous highs. Let's label them with a letter I. Such movements tell us about the strength of buyers or sellers in the market. If you see that the price of an asset has broken the previous high and continues to rise, this is a strong uptrend signal. It is like a green light to buy, as the market is showing that buyers are getting more and more confident. The market may pause after each momentum movement. These are periods when the price slightly corrects downwards. They are called pullbacks. These pullbacks are important because they allow the market to catch its breath before the next spurt. It's important to understand that pullbacks are part of a trend and not its end. After a momentum movement, the market rests. A pullback is followed by the next momentum movement, which breaks the high, and then we may see a pullback again. The best way to identify an uptrend is through pullbacks. During an uptrend, when there is a pullback after a momentum movement, the price will hardly break the recent low. To make it clear, let us draw lines between the lows on the chart. This is the lowest point of a pullback. As long as the market remains above this point, we consider the trend to be upward and continue to look for buying opportunities. As confirmation, we see another momentum movement that broke the previous high. Then we're likely to see a pullback. As long as it's above the previous low, the trend will be bullish. If the low is broken, it may be a signal of the trend weakening or even of its reversal. Thus, it is more reliable to monitor how the market reacts to these pullbacks. If the price continues to form higher lows and higher highs, the uptrend is likely to continue. Now, let us practice. Imagine that you're analyzing a chart and you see that after an upward momentum movement, the price starts to decline. Your task is to closely monitor how deep this pullback will be. If the pullback stops without breaking the previous low and the price resumes rising, this is your chance to go long. A successful trader needs this information because profitable trades are performed following the trend. The situation with the downtrend is the opposite. Let us focus on the chart. If the price line is going downward, it means that the trend is downward. This is a signal for traders to sell, as prices may decrease even deeper. If, after these small rises, prices resume falling and each new move is lower than the previous one, then the downtrend continues. These are the moments when traders are looking for selling opportunities to make money on falling prices. In case of a downtrend, we see downward momentum movements. They are considered to be strong signals that sellers have taken the initiative and the market is set to decline. Each such movement confirms that the downtrend continues. To understand whether the downtrend will continue, we need to focus on pullbacks again. If, after a pullback, the price does not break the previous pullback high and resume sliding, it confirms that the downtrend remains strong. In practice, this means that if you see on the chart that after a small rise, the price resumes falling and each new fall is below the previous low, this is a perfect time to consider selling. This is your signal to act, indicating that the downtrend continues to gain momentum. Understanding trends and being able to recognize them on the charts are the key skills for successful trading. They allow traders to synchronize their trades with the general direction of the market, which greatly increases their chances of success. Remember, trading does not promise instant wins and requires patience, training, and discipline. Our goal is to provide you with the knowledge and tools to become a more informed and effective trader. Good luck and see you on our channel.